what's up, everybody? It's Thomas Bahamas, and you are here for another episode of Solana Weekly. I would like to introduce you all to Eno, who is the co-founder of ISC, the international stablecoin. He is proudly part of the Mustache DAO, and I've seen it on the video now, true to form. And he is the man leading the charge for flat coins on Solana. He's out here protecting our purchase power while the dollar is slowly losing its value. And I want to give a warm welcome to the show. Welcome, Eno.
Oh, thank you very much for having me, Thomas. I'm imagining virtual applause. So yeah, man. This is the first time that we're speaking. I'm actually really glad to have been invited to speak here about what's maybe going on with not only ISC but also just stablecoins in general.
Yeah.
I think it's a very under discussed topic because
Oh, yeah.
obviously what's shiny and new are like different forms of governance and like meme coins, stablecoins. Most people are content with using their USDC, especially on Solana. So it doesn't get a lot of play, that discussion.
Yeah, no, I completely agree. Like one of the things that I was thinking about when I was thinking about having you on, I was like, all right, what is one of the biggest sectors that's used on Solana? And it's stablecoins, right? Like it's because we're able to do so many things with Solana. And it's so cheap, so fast that payments are actually taking off on Solana, right? And a lot of that has to do with stablecoins, I think. So I think that it'll be great to hear kind of your perspective on that. And obviously, I think that, we're over reliant on USDC. But I think that's getting us, the start that we need to kind of get us to where we need to go, if you know what I'm saying.
Yeah, absolutely. Give credit where credit is due. If it wasn't for the work that Tether and Circle did, to have very deep liquidity USD stablecoins, you wouldn't have any of these exchanges. You wouldn't have DeFi. So it is a very important product, and I don't see them as competitors at all. One because they're so big,
Yeah,
and
yeah.
two because like, we're so early, right? Like the total stablecoin market cap is like what, like 140, no, 180 billion-ish, right? So there's a long ways to go. Total money supply of the world is like around like what, 85, 95 trillion, somewhere around there.
Yeah.
So yeah,
Small
we're
piece
not
of the
really fighting
pie.
each other for, yeah, very small piece of the pie. So we got a long way to go before we're actually truly competing against each other.
Yeah. Yeah. No, completely agree. And I feel like I'm not sure if it was Solana was like the first one to be so well integrated with stable coins, but like after using Solana for a while and having, such an easy experience with USDC and Tether, like I remember going to ETH and swapping to stables and you look and there's, 20 different versions of USDC and it didn't seem as clean and as like as easy to use, as user friendly, right?
Yep.
So I feel like that was something that's going to really bring people to it where you can actually, at least it feels like, you're spending dollars like you would your current way. But that's not necessarily what we want when we're in crypto, right?
Right. Well, I mean, to be fair, Ethereum obviously just by total dollar amount, like absolute dollar amount, has the most stablecoins issued.
Yeah.
But actually, the most used chain for stablecoins is Tron, and that
Yeah.
surprises a lot of folks, especially if they're not familiar with what's going on in emerging markets. But Tron USDT, and by the way, like Tron, like USDT is basically 98% of all stablecoins on Tron, which is very unlike other chains, right? For like in Solana's case, I think USDC only compromises of maybe like 60 or 70% of the market, the rest mostly being USDT. But my
Hmm.
point being is that for folks in emerging markets, they largely use Tron USDT either as a store of value against their shitty local fiat, or to just send money cross-border, whether it be like Pan-Africa or like Pan-South America. So that's been a very interesting development. And there's a lot of work to do on Solana if we want to overtake Tron as the number one chain for stablecoins, especially used and beloved by retail. Also can't discount the distribution that Tron USDT has with on and off ramps, right? Like there's not a lot of great Solana on and off ramps. Like I can't go to like some local OTC dealer in Nigeria and give him Solana USDC. Like he's going to accept like Tron USDT, maybe Ethereum USDT as well, but mostly Tron.
Yeah. So like as of right now, it's crazy to think about how like globally distributed everything is. But when you look at it as a whole, I'm in the US, so I'm like, I think very US centric, right? And I focus on Solana.
Sure.
So I think, that's what I see most of the time. But that's a small part of the picture that we're looking at in whole. Um, yeah, like what do you think it's going to take for, stablecoin usage to really kind of balloon out into, competing with Tron? Because Tron's got a pretty good like that they're the first mover advantage at this point, and they're
Yeah.
out there, right?
Yeah, so I mean, if we just talk about first mover advantages, I think that's a great topic. So like number one, I mean, sure, like Tether wasn't the first one to issue a stable coin. I forget what I think it was like True Dollar or something like that. But anyways, like Tether was either second or third.
Hmm.
But their go-to-market wasn't even DeFi. It was just like let's get listed on every exchange. Of course, Tether, the parent company that owns Tether, also owns Bitfinex, which was one
Hmm.
of the largest exchanges at the time. And so like they really went the exchange listing route. And also like I'm led to believe that they had a lot of ground game, like
Hmm.
actual on like boots on the ground onboarding of OTC dealers all throughout emerging markets. So what do we have to do? Well, like if we want Solana to be the number one chain for stablecoins, I think there's a lot of inspiration to get from Celo. So Celo obviously is another chain that has a deep presence in emerging markets, and
Hmm.
it's kind of like, okay, if you're MasterCard, then how do you beat out Visa? Well, most likely you won't.
Yeah,
But if
yeah.
you were attempt to, you would have to approach the same merchants again and get them to accept MasterCard payments. Like even now, like what, 20, 30, 40 years in, Discover and American Express don't have anywhere near the same coverage as Visa and MasterCard. So it really is a war of attrition where
Yeah.
like the first mover advantage, everyone adopts it just because, network effects. And then there's probably room in the market for a second chain. But once you start, if you're too slow, right? Like as an OTC dealer, it's enough for you to accept Visa and MasterCard, and that's what the majority of your customers are using anyways. So what's the incentive to add a third or a fourth payment network? So there's definitely an OTC component that we have to work on. The second thing too that can't be discounted, but sounds like it's very basic, is mobile experience. So one of the ways that Celo has been able to make um, massive inroads into emerging markets is a very neat wallet onboarding experience for retail, right? So there's this startup called MiniPay, and there's a bunch of other wallet projects that make it possible to create wallets using phone numbers. But for
Hmm.
whatever reason, MiniPay was able to crack this UI UX puzzle for Africa specifically. And so that's how you see Celo being used for real retail transfers and payments is because they got the mobile experience exactly right. So it's kind of like a two-step process, I believe. One is that you definitely have to approach all of the OTC dealers, which is not an easy task, and convince them to accept Solana stablecoins.
Hmm.
And then two, like you need to have a killer mobile app experience so that anybody in these emerging markets can use it.
Crazy. Yeah. Yeah, that sounds like a lot of work, right? There's no the answer is there is no easy work, right? It's not an easy
Yes,
job.
no,
You're gonna have to dive into it and really do a lot of work to get there.
yeah.
Um, yeah, yeah, and I mean, I guess we kind of took that on tangent to kind of move to the first movers, but there are a lot of stable coins out there, and there are a lot of other networks that are using stable coins. So when did you first start building on Solana? Was that an early decision? Like I'm going to be building on Solana. This is what I want to do, or take me back to when you were getting everything started.
Yeah. So I mention this all the time, and I'm not very shy about this at all. ISC was not my idea; it was my co-founder's idea.
Hmm.
Richard is responsible for most of the good ideas that we have at the company. I'm probably responsible for the highest volume of bad ideas, but in terms of quality ideas that we execute, Richard's more or less the architect of that.
Hmm.
Um, and so basically, my journey into crypto was I had met Richard and our third co-founder who prefers to remain anonymous as interns at Samsung Electronics 10 years ago.
Oh
So
no way.
that was in 2013 in Korea. We built up a personal relationship. We were working at different departments. There's not a lot of foreigners in Korea.
Yeah.
I'm an American. Richard and the third co-founder are from different countries. Um, And so like, our relationship was very much just like we were foreigner friends in Korea, expats in Korea, right?
Yeah.
And then around 2018, if I'm not mistaken, Richard left first to start an HFT. And I had built my career at Samsung more on back office operations. So we're talking about legal, accounting, a little bit of marketing, but certainly was not my expertise. And so he just kind of hired me out of Samsung for the HFT. But I was abstracted from the crypto side. So I didn't really give a shit. And quite frankly, I thought it was mostly a scam. My only crypto at the time was XRP because I did
Yeah.
buy the thesis of a bridge token for bank transfers, especially since international banking money flow is not exactly the most efficient, let's say.
Yeah.
Um,
Yeah.
sta What's ironic is in between that time when I bought XRP to like when I actually got started on stablecoins, I didn't realize how much stablecoins had evolved and how stablecoins ended up becoming what XRP's original thesis was, right? You don't need a
Yeah.
bridge token if you have dollars on chain. Um,
Yeah. Yeah.
uh, and so the original shower thought from Richard is like, isn't it kind of fucked how USDT and USDC invest customer funds and then they take all the profit? Like that was the very basic thought. And he's like, what if we just like redistributed the profits back to the stablecoin?
Hmm.
And then we went a little deeper and said like, okay, I think we could do better than Treasury bill yield. Like Treasury bill yield is kind of cyclical and or conditions dependent, right? Like during the Obama years, it was close to zero.
Yeah.
Right now, we're having it around 5%. So like, how do we architect a basket of assets that provide a consistent and reliable return? And then that led us down a rabbit hole of like Ray Dalio and his all-weather portfolio. And then the all-weather portfolio is, of course, very famous for being a passively managed basket of assets. Yeah, there is rebalancing with target percentages, but it's passively managed, right? And the assets are inversely correlated, meaning that I'm sure you know this, but meaning that in a year where, for example, stocks are performing particularly well, bonds typically aren't performing as well. So what you get is net positive growth, but also a balancing of assets that are performing better than others, hence the inverse correlation. Why is that important? Because if you optimize for inverse correlation, then you're also optimizing for stability as well, which is what you want for a stablecoin. So
Yeah.
that's kind of my entry into crypto. I was very much abstracted from it. Richard opened my eyes when I learned more about kind of how the Tether and Circle business model worked. And that's when I actually started becoming more degen, ironically.
That's still, yeah. Well, when you mentioned how Tether and Circle make so much money, and I mean, Tether makes a ridiculous amount of money. They have a very small amount of employees, and they like the amount per employee is insane. Like I don't remember the exact numbers, but it's like they have as much profit as like BlackRock or something like that with less than 30 employees or something like that. Like the numbers are outrageous, the way that they do it. So for you to be able to kind of turn that on its head and provide that yield back to users sounds amazing, right?
Yeah,
That
I
concept
mean,
sounds great.
to be clear and fair, right? Like if we were, I think Tether's at like 118 billion, or 120 billion last I checked.
Hmm.
They're earning approximately 5% on that. Obviously, it's not all in T-bills, like some of it's in Bitcoin and other investments, but let's just say for the sake of argument, it's 5%. If we ever got to Tether scale, our business model is so different. Like right now, we're not taking any cut. If we were to take a cut, it would be, maximum 1% of all assets under management. So obviously, like by a factor of five, we're making way less profit than Tether would at their size. But at the same time, it's kind of ridiculous that, as you pointed out, a 50 to 100 person company, no one really knows, right? But
Yeah.
a 50 to 100 person company is earning 5% on 118 billion. That's insane.
Yeah. That's a lot of money. That is a lot of money. So you take, so I've definitely read a lot about the all-weather portfolio, and it's basically like you're supposed to be able to have, you're supposed to be able to weather any market. That's the idea behind it. So you guys are basically putting that plan into action in a basket of goods, and that is essentially what's backing the ISC coin. Is that right?
Yes, that's exactly
And
what ISC is collateralized with. Yes, correct.
and is there an easy way to say how you guys back that? Like how
Yeah.
exactly does that go from, a trading account, an account that you guys hold, and then how is that digitized online? Like what does that process look like, and how should I think about that? I feel like I'm not even asking the question right on that one.
No, no, no. That's a super fair question. So I mean, one caveat here is that we are not exactly the all-weather portfolio. We did make
Mhm.
modifications to it.
Okay.
And so the reasons why we felt the need to make modifications to it is that the actual all-weather portfolio returns way more than what ISC does right now. The historical return for that is anywhere like around like 15-20% a year. But the cost of that 15 or 20% is way more volatility in the price of the basket of the assets. And so again, like if you're trying to architect a stable coin, and stable coins are supposed to be stable in value, right? Like non-volatile, then obviously like, yeah, it'd be great to juice another 5 or 10% in yield, but not at the cost of stability because people want to cash
Yeah.
out when they want to cash out. And so like we made we definitely like increased the allocation of certain assets like gold, let's say, right? Or even cash, to
Mhm.
make the basket even more stable. So right now the APY is at about like 10%. Historically, it's if you look at the back tested data, it's actually only 5.06%. We're a little
Mhm.
shocked at how well the basket of assets are performing, but perhaps that's the comment on a weakening US dollar. That's a maybe
Yeah.
a topic for another day.
Yeah, well, I mean,
Yeah.
it's hard to avoid that if you like follow any sort of news or any sort of, financial news, or if you have Bitcoiners in your feed, they'll talk about it every day if you let them,
Yeah,
right?
yeah. In terms of, okay, so like how are we pegging ISC to the price of that basket of assets, right? It's
Yeah.
actually no different than like theoretically than what Circle and Tether are doing.
Hmm.
And so what I mean by this is that I mean there are some obviously some key differences here. Like for example, Circle and Tether, they're taking customer deposits and then they're taking the 5% that they get from treasury bills after reinvesting those customer deposits. But they're only promising you $1. So they basically just shave off that 5%, right? So like what we have to do is have Oracle pricing for each asset class, right? So we have 20% cash, 20% gold, 20% US Treasury bills, 20% global bonds, and then 20% global stocks, right? And how we get our exposure for each asset class, with the exception of cash, is an ETF, right? So essentially you have um, like you can think of ISE as a formula expressed as like a little bit of this ETF plus a little bit of that ETF plus a little bit of this ETF. All right. Um,
Because then you're able
uh,
to pull those feeds directly off those ETFs, and essentially like the feed of the Oracle is going to be telling you the price of all of those, and then you guys put that all together into one, and that's the price of ISC. Is that?
exactly, right. So you have Oracle price for ISC.
Mhm.
And then there's a couple of ways to maintain peg. So there's the way that's described in the white paper.
Uh-huh.
And then there's kind of like the broader mechanics, and then there's like kind of the more practical how it actually works, like in practice.
Mhm.
Um, so like how it actually works in practice is that, we concentrate liquidity on Meteora and several other channels, right?
Mhm.
Right at Oracle price point, right? So that's how you peg anything, right? Um,
Yeah. So as
and
soon as
you
it's
make
so it's so essentially as soon as it starts getting out of peg, the liquidity pools are gonna buy that, or essentially they're going to like suppress the price down if it's too high because it's gonna buy it, right? Does
right,
that sound
right.
right? Or there's probably a
Eh,
fancier way to say that, but
Yeah, yeah, no, the fancy way of saying it, and it's not all that fancy, is that the team that's responsible for market making the token is arbitraging on the price of the token versus the price of the assets that they actually have off chain, right?
yeah, yeah,
So it's like if there's a price gap between token price and like what the known value of the assets, so you could think of it as Oracle price, right? That's a very sexy
oh yeah,
arbitrage opportunity either way, right? Like
yeah,
ISC goes 2% off peg, like that's not going to last for very long.
yeah,
Because
yeah,
it is especially at size, right? It's very attractive arbitrage opportunity for anybody. And the ultimate goal for ISC is to move all of these assets on chain. The only reason why we haven't done that sooner is just lack of liquidity. It's makes us feel a little uneasy to try to scale ISC using on-chain. Obviously, it's romantic, the idea, but practically speaking, we need to see a little bit more from the RWA market before we feel comfortable going 100% all in on that. That being
Yeah.
said, we are working with very good friends over at Etherfuse,
Hmm.
who are helping us. Etherfuse will be issuing, forget exactly which asset class, but yeah, I think it might be bonds, might be tokenized U.S. Treasury bonds. But anyways, yeah, they are our first foray into collateralizing ISC with on-chain assets.
And so they're, oh wow, so they're actually bringing like real life assets, bonds on chain.
Oh yeah, Etherfuse is if you haven't heard of them, I mean,
I haven't.
absolutely stellar team. I think their first product was Mexican Treasury bonds,
Uh-huh.
followed by US Treasury bonds. Will be followed up by in the future they're going to have, I think they're called British notes. I think notes are the European equivalent to a bond. The Euro note is also coming as well. They have like Brazilian bonds and or notes coming. So I mean, basically, they're in terms in my mental map of who's actually doing the hard work of bringing and not just actually in a weird way, tokenizing the asset itself is not that hard, right?
Mm.
However, attracting liquidity and marketing for that asset is like
Oh yeah, yeah,
those
I
are
would
the hard
imagine.
parts. But
Yeah,
like theoretically, anybody could create like if you have the banking access, right? Like you could tokenize anything that your broker gives you access to.
yeah,
It's just a matter of like, do you trust the person who's supposedly tokenizing the asset? And in Etherfuse, we found a very good team. Um, and then also like, do they have the chops to actually like market this and provide liquidity for it? Which again is like a separate issue.
yeah, yeah. Seems like a lot. So that would be, so that's essentially like, that's RWA. That's a real world asset, right? So you guys are considered an RWA, and that would, is that right?
So like the way I like to think of ISC, and there are a bunch of detractors who recently I tweeted about what would it take for you to swap into yield-bearing stablecoins, and I feel like people gave me an earful, but it was really nice to hear everyone's feedback. A lot of people say that ISC isn't a stablecoin, and I say like, okay, well then what's your definition? Do you consider like fiat currency, like all fiat currency a stablecoin then? Like how is ISC more stable than like let's say Nigerian naira or Brazilian real? And why would Brazilian real be considered more of a stable coin than ISC is? Why? Just because it's fiat currency? Like that argumentation like doesn't make sense to me at all, right?
Yeah,
And furthermore, yeah,
I don't think a lot of people are ready to address those questions, right? When it comes down to it, I feel like
right.
those questions are deep where it's like, oh, maybe then it's like, what am I doing with my bank account, right? So it
Right.
leads, I feel like it leads people down a dark path. So I don't like going down it, right?
Yeah, sure. Fair enough. But kind of like another question too is that, okay, like what was money before, right? Like, well, obviously there's a reason why there's a hard money is called hard money because either in, version one, it was literally just gold or precious metals or jewels or whatever the hell. And then it was, Bretton Woods, right? Very much a dollar pegged to a fixed price of gold, and then everyone else pegged to a dollar. You have other currencies around the world that are pegged to kind of more or less pegged to the dollar. You even have other currencies like the Singapore dollar, which is kind of like more or less collateralized, but not directly, but by a basket of assets in the Singaporean reserves, because the Singaporean government is very efficient and has excess every year. And
Mm.
ironically, the basket of assets collateralizing the Singaporean dollar are almost exactly the same as ISC.
Oh, no way.
Perhaps yeah, perhaps different in the percentages. And also we don't have real estate as a part of our holdings, but like very much the same, right? So it's like, why is Singaporean dollar a stable coin, but like a tokenized Singaporean dollar a stable coin, but a return to hard money, which ISC is, right?
Yeah.
Not. Um, so like gold standard was again like currency pegged to a fixed price of gold. Well, what if you just expanded the asset classes, right? So like you don't just base the value of the currency on just gold, but like five most liquid markets in the world, right? Cash, gold, T-bills, bonds, ETF, stocks, ETF. That's pretty liquid, right? And what you're getting is hard money 2.0. So that's kind of our thesis for what IIC is theoretically.
Yeah. I mean, it sounds amazing. And I think we're kind of starting to see, I mean, especially in the last few years, like the price of the dollar is going down, right? Like everybody's starting to actually notice it and kind of wake up to it a little bit. So I feel like you guys are kind of coming in at the right time with kind of the right product, if it makes sense. So uh, I think it's awesome.
Yeah, I mean, like to be fair, and this is some of the criticism that we got online is that like you guys shit on the US dollar all the fucking time, and you guys are backed by 20% US dollars and 20% US Treasury bills. And I'm like, yo, fair enough. But quite frankly, like we don't want to be backed by US dollars and T-bills. They just happen to be very, very dependable source of yield. As long as the United States keeps paying back its T-bill debt. I am getting a little nervous about the politicization. I don't even want to talk about politics, but like no one can deny that there is, especially when budget conversations come up every few years, that there is politicization. I can't even say that word. Paying back T-bill debt is now weaponized.
Yeah.
By a side I won't identify. But it's like if you don't give us what we want in the budget, then like you could say goodbye to paying back T-bill debt. And it's like, are you insane?
Yeah.
Are you literally insane?
Yeah. Well, and that probably won't be in your basket of goods for that long if the yield starts dropping as they predict, rates kind of to keep coming down, right? Because I mean, it's a
Yeah.
5% or 4.5% right now, which is historically pretty high, right?
Yeah. Yeah.
Yeah.
That's true.
Yeah. So, okay. So when you guys started this, are you guys considered a flat coin? Was that right in calling it a flat coin earlier?
You are absolutely correct.
Okay.
So just to school do you mind if I go on a mini rant about flat
Oh
coins?
no, no, please do. I want to hear it all because I heard about flat coins in a Balaji podcast like 5 years ago, and he kind of predicted this. So ever since you guys popped up, I've always kind of followed along because like it's a really cool concept, and to see it actually in practice, I think is awesome. So I'd love to get schooled on it.
Yeah, yeah. So what Thomas is talking about for all the listeners out there, is Balaji, the I don't know if I don't think he likes being called the founder of Network State, but kind of like um, the guy who started the concept of network states,
Yeah, yeah,
and also very famously bearish on the U.S. dollar. Predicted actually Ray Dalio predicted around in different terms, didn't coin the term flat coin, but both Balaji and Ray Dalio around the same time 5 years ago were exploring this idea of a purchasing power coin. And the reason why purchasing power coins are referred to as flat coins are because they keep your purchasing power flat. Whereas if you use USD stablecoins or even like a Euro stablecoin, because inflation is a feature, not a bug of all fiat currency, your purchasing power doesn't look flat on a graph. It actually trends downward on a graph. So basically, my rant here is that we need to rethink how we think of the both the term stablecoins, which most people just equate with US dollar. You've probably seen my Twitter banner. It's just like stablecoin is not fucking US dollar, right? Those are the
yeah.
it's kind of like how all elephants are animals, but not all animals are elephants, right?
Yeah. Oh yeah,
Um,
yeah,
all USD fiat coins are stable coins, but not all stable coins are USD tokenized USD, right? So in my mental model, it's a very basic tree where the superset is stable coins, which is the catch-all term for all assets that meet two key criteria. The first is that it's non-volatile in price, meaning that like you don't get spiky or spicy price action, like intraday or even like intra-week, right? And then the second key criteria is that it needs to act as a dependable store of value. So actually, in very meaningful ways, I would almost argue that a tokenized Turkish lira is not a stable coin. It doesn't meet the basic definitions, even though some people might think of it as tokenized Turkish lira as technically a stable coin. But in my first principles view, it's actually not, right?
because
Um,
it's lost a considerable amount of its value in the
and it
last
and
so
it
much, right? Yeah.
continues to lose a considerable amount of its value. So until it starts to stabilize, it's neither a good store of value, which is condition number two, and it is spiky in its price movement, either intraday or intra-week or intra-month. So based on those two, it's like this is my version of like a Turing test, but for stable coins. It's like, yeah, it needs to be non-volatile, and it needs to act as a dependable store of value. So those are the basic criteria. So stable coins are again the superset, the catch-all term for stable coins. And then you have two subsets, right? You have fiat coins, which is just obviously just tokenized fiat, so euro, Singaporean dollar, yen, Brazilian real, Argentinian peso, US dollar. And then you have flat coins. That's a second subset. So tokens that are either directly pegged to CPI, or loosely follow inflation, or exceed inflation to protect your purchasing power. We're obviously not the only ones working on a flat coin. There are a bunch of friends out there in the Ethereum ecosystem that are working on flat coins. But a lot of
Mhm.
them have kind of transitioned to flat coins being their like second product. Like Frax, for example, has FPI, which most people don't even know about. But
I don't.
yeah, but Frax has a flat coin. They don't particularly talk about it all that much. They don't market it all that much. It's not the main product. They have tokenized dollars, which is fine. So yeah, there's a lot of different companies that are experimenting with the idea of flat coins.
Yeah. Yeah. And I mean, that's such a step up for a lot of these people. I mean, when we talk about these currencies losing their value, I mean, it's like hardworking people not able to pay bills anymore. Like it's a very dramatic effect for all these people that are affected, so much so that like they see, USDT on Tron and they're like, all right, the dollar is a much better store of value because it's not losing its value anywhere nearly as close as their local currencies. So they see something like that and they can go right to it, right? It makes sense to them. They understand it. It's a couple hoops to get into, a wallet or there's a local exchange. Those people, like onboarding them is not a problem, right? Like
Yeah.
they're gonna see that and they're gonna flock to it, right? Obviously, it's not, ideal, an ideal situation, but for somebody in that situation, it's not having to convince them necessarily. It's like they're gonna see it and they're gonna want it, right?
Well, to be just to give the cold, honest, hard truth, I think that ISC only makes sense for a specific risk profile, and I think that a lot of folks do fit this risk profile. But that being said, like it needs to be acknowledged that there are other folks out there with much higher risk appetites, and would prefer like a synthetic dollar approach, like Athena, right? Where like yes, the yield that's being sourced is way more risky. It's not RWAs. But I don't mind getting upwards of 25% or 30% on my dollar based on Ethereum funding rates, right? So like I think when we first started ISC, we didn't know shit about shit.
Yeah, yeah.
But where we've really found kind of our niche are Web3 CFOs, so like people who are controlling large treasuries. There's other issues with regards to liquidity that are stopping like real adoption of ISC for treasuries. But
Mhm.
just conceptually, right? Like when you talk to Web3 CFOs that are looking for very safe yields that doesn't require trust in a protocol, like you don't have to deposit your tokens anywhere. The yield that's being sourced is good old boring RWAs. Like ISC really makes sense in this specific case.
Yeah, I mean,
Um,
you could put that into a multi-sig and you're not, it sits there, right? It's not in any sort of protocol. You don't have to explain, the safety protocols of, a random DeFi operation where your money's sitting in, right? It's like, no, this is the
right,
coin, this is where it is.
right.
That does sound a lot cleaner. The treasury would be a great use case for that, huh?
Yeah.
Yeah.
Another place is actually GMX style perps. So like I
Okay.
don't know if you're familiar with some of the mechanisms of GMX style perps,
I
but
used to use GMX on Arbitrum, right?
yes, yes.
I don't necessarily know the mechanics behind it, but it got me a nice Arbitrum airdrop because I used it a few times. So
Nice.
yeah,
Very nice.
yeah.
Um, well, I mean, famously, I think the most popular GMX style platform on Solana is Jupe perps, right? Like Jupiter perps.
Hmm.
So the basic mechanics are very, very simple. You typically have like 60% of the pool in exposure to long assets. So in this case, for Jupiter, it would be Bitcoin, Solana, and Ethereum. And then you have 40% of the assets available for like they're in stable coins, right? So right now it's like 50% USDC, 50% USDT from what I understand.
Mhm.
Um, when you go long, essentially all you're doing is you're locking up the long assets that are in the pool, right? So they're now no longer usable by anyone else. And if you close your position and you make a profit, then they just like sell the existing long asset that they have, right? Whereas if you short, you're using stable coins. Um, and they don't purchase the asset at all. They just lock up a portion of the stable coins that represents the position, and they do take a bath if shorts win.
Oh,
But quite frankly, the just from a structural perspective, like way more, it's no fun to be a bear, right? So like just to give you real numbers for this, the utilization rate for longs, is anywhere from like 60 to 90%, sometimes even closer to 100 when things get crazy. But for shorts, it's like 10, 20%. Like again, nobody wants to be a bear.
yeah.
So that's where it makes sense to have a yield bearing component because if you have 80 to 90% of the pool that's not being utilized at all, but like, why would you even have that? Well, you would have that portion because you don't want full exposure to the long, right? Like, you don't want 90% of the pool to just be Bitcoin, Solana, and Ethereum. It would be too spiky, right? So, like, that's why you need a 40% stablecoin allocation. But the bummer here is that if you're just using USDT and USDC, you're not earning any yield on that, right? So if you were
Yeah.
to have a token that were providing like 10%, on this like 80 to 90% that's being underutilized, or just not utilized at all, that's more value accrual for LPers. So,
Yeah.
yield-bearing stablecoins actually make a lot of sense, both in a perps context as well as I'd say treasury. ISC makes a lot of sense in those two contexts because of the level of risk is quite low, and the yield that you get for that risk is very high. But obviously, there's a lot of other problems with regards to like unit of account.
Yeah. Yeah. I guess that would be the tough part, right? Because you look at you know, people think in dollar values, right? So when you look at your position and you're up $1,000, you want to see 1,000 USDC, right? You don't want to see,
Yeah.
the because what is it, $1.88, $1.78 is what each ISC is worth right now. Is it
Yeah, I think it's like $1.82 if I'm not mistaken, or
$1.82?
$1.81.
Yeah.
Yeah, yeah.
But it's been up
Um,
like like if you look at the history, it's like a slow line up, right?
yeah,
It's been increasing in value where if you have USDC just sitting in your wallet, it's just USDC, right? That's not
dude,
increasing at all.
I totally get why the French fought so hard to have like French be used as an official language at the UN and like just post World War II, like building the new world order, like trying to get, what was that other language they tried to create to bridge the gap between all the languages and be neutral, like Esperanto, something
Something
like
like
this?
that. Yeah.
Yeah, 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 yeah. But it's like once something becomes like now English has this unfair knowledge advantage on any other language because all the novel research and all of the like if you want to learn anything truly interesting and that's on the edges, it's going to be written in English first. There's obviously like some exceptions to this rule. So like the Japanese are very famous at being able to protect their patents because all their fucking patents are in Japanese. And so like
So
they
nobody
have
can read
this
them.
yeah, yeah. I mean, like you could, but like just in terms of like knowledge transfer and the speed of knowledge transfer, that's why certain industries in Japan, like lens technology, cameras, bicycles, like all those patents, like the Japanese are A class in that, and no one's really going to be able to catch up because all the patents are in Japanese. And again, like you can translate them one by one, but like you don't have it's not very efficient knowledge transfer. And so the Japanese are just
Yeah.
kind of from a structural perspective able to keep that knowledge within Japan. Uh, English is very much the same for basically every topic, right? Like there's much more novel research being done in English than in French. And it's like, why am I going on this weird tangent? It's because USD is the lingua franca of the world, the financial world, right? So like in a world where everyone just prices everything in USD, even motherfuckers not from the United States, it's just like how do you so like I've had
Yeah.
really weird ideas about like how to fix this. And like it's not even a fix, it's just like really fishy, niche, dumb ideas. But I'm like, okay, like what if we started a price is right show online, but then like all the prizes were like denominated in ISC.
Yeah. Like it's somehow break into that mind share just to get it out there more. Yeah.
Yeah, but you'd need to do that at scale and like for each cult. I mean, it's just I don't know how like truly it boggles the mind when I think about like how do we even create inroads here? Like I get some inspiration from the Bitcoin and Ethereum communities because like they do price things in Satoshis. Like it's kind of
Yeah.
bizarre to me that they do, but they found a way to create a cult-like
Yeah.
experience where it's all like, well, of course, if I believe in Bitcoin being the future currency of the world, I'm going to start thinking about the world in Bitcoin. I want that for ISC, but admittedly, that's not an easy problem to solve.
Yeah. I always had so much trouble with that at the point, 0.000231, like all those zeros, it just never made any sense to me. But if
No.
you if you think about it that way for long enough, that becomes the mind share, then you can see it. Um, I feel like in wallets now, and especially in Jupe, at least they put dollar values next to everything now, so
Yeah.
it's kind of like you can see it in there, so it's not you don't have to like guess how much is in there. But
Yeah.
yeah, it's everywhere, right? It's everywhere in crypto. It's all
All
dollar
pervasive.
denominated. Yeah.
If you were, do you, I mean, you're an American citizen and we're both American citizens. I don't, but like, does it bother you at all that essentially 98% of all stablecoins on chain are US dollar denominated? Like the fact that they're like, do you care or do you consider that to be a good thing?
I kind of go back and forth. I think it's like I think personally, like the way it is, like is it's kind of an extension of the US dollar and probably kind of helps out in the long run. But yeah, I mean it also makes it really easy for me to like understand the values of it. And I think in US dollars, so when I see that it makes sense for me. But yeah, I would assume it's a good thing. I've heard arguments against it, but I don't know. What are your thoughts on that? Sounds like you got a
I
spicy
just
spicy take.
it's not so spicy. It's just, it's more, I suppose, perhaps a naive romantic take. I think it would be beautiful if people could interact with Solana DeFi in their native currency without needing
Oh
to
yeah.
use, yeah, is kind of my point, right? It's like obviously as Americans, like we're raised thinking about things in terms of dollars, but obviously like no child in Singapore or in Europe is growing up thinking about US dollar denomination. They're going to think in euro and they're going to think in SGD.
Yeah.
And so when we think to onboard, I know Mert hates this term, onboarding the next billion, but
Yeah.
I still think that's the goal. So I'm going to stick with it. Sorry, Mert. But when we think about onboarding the next billion, I think, yeah, certainly like anybody who's financially motivated enough is going to denominate things in US dollar if they want to participate. But it would be beautiful if you could do everything that you already do, but folks could just use stable coins in their local currency. Um,
Yeah.
like obviously, like this makes sense in more cases than others. I already hinted at like Nigeria and Argentina's kind of gotten their inflation under control. But Venezuela, for example, like their currencies are shit.
Yeah.
Turkey, their currency is shit. So like they would probably prefer to use the US dollar anyways, because that's what they're already doing on the
Yeah.
ground,
Yeah.
irrespective of crypto. Um, but certainly there are a lot of worthy fiat currencies out there that where I think it would be great if more Solana DeFi protocols and apps were to just integrate non-USD stables more. Just for
Yeah.
like I want someone to create like almost like a this, I mean, it's not even like a plugin that you would need because you could just enable the token, whatever tokens you want with the wallet adapter. But yeah, I wish there was like a stablecoin wallet hack where it's all like these stablecoins are trusted. So like please just integrate this into your app and like this will like allow you to, but they don't need that on a technical level, but um yeah, like just
It'll
the default for all dApps and for DeFi is USDC. And there's real reasons there in terms of liquidity, right? Like there's not enough liquidity in like let's say Euro or SGD stablecoins to use them for main point pool or for payment use cases. But
but they do have those coins, right? And then I mean
yeah,
it wouldn't necessarily be that hard for them to allow it to show your native currency, and then it would make a lot more sense for everybody rather than just using your magical internet money for dollars, right?
Yeah, yeah. But there are real structural issues there. Like, so what I mean by this is that very easy to create like USD over USD liquidity pools, right? So essentially, or I mean, and I'm quite frankly like almost the token pair. It's either X token Sol or X token USDC, right? So
Yeah, yeah, exactly. That's exactly what it is, right?
um, maintaining USDC price is like super easy because everything's denominated in USDC, but maintaining the peg price for Euro or for ISC or for any of these non-USD stablecoins is actually a real problem.
Is it?
Um, yeah, because like for USD, especially over USD over USD pools, so like you don't have to concentrate like you don't have to manage the liquidity range. So it's at a dollar,
It's
right?
yeah, dollar dollar. Yeah,
Yeah. But if you're doing euro over dollar, it's actually a fucking pain in the ass because like
really.
euro fluctuates just like any other currency. US dollar fluctuates too, relative to euro.
Yeah.
But the euro loses out because it's like you have to what the user experience looks like if you're trying to LP. And this is not just for retail. This is for liquidity funds. This is for VCs. This is for institutions. Anybody to looking to provide liquidity on chain for non-USD assets. You have to concentrate your liquidity right at that price point, right? Like let's say a dollar is like I forgot what the euro conversion is now, like $1.14 or $1.20, whatever. Um, you want to concentrate all of your liquidity at that price point, or a very narrow range, because otherwise, like you don't get any of the trading fees. But when you do it so narrow, because it's not like a meme coin where you could set the range at like, 20% upper or lower of the current price. For a stable asset, you want it to be very much like a percent. Uh, sorry, am I cutting off?
It was shaking a little bit, but I can hear you.
All right, sorry. Um, yeah, just yeah. So I mean, like for a meme coin, you could provide liquidity like 20% range from current price, either upper or lower, because it fluctuates so much. But
Yeah.
for a stable asset, if you want to get any of the fees from trading, then like you want it to be like within 1% or even probably even tighter, right? Of current price so that you're actually getting the fees. Um, so what that means for LPers is they have to manage that shit daily or even hourly, right? Because
Oh,
euro
really?
price
So
fluctuations. Yeah,
yeah,
yeah, yeah.
you can't just
Um,
set it and forget it. You have to actively manage that. Oh yeah, that's tough.
Yeah. Yeah, yeah. So like there's certain players that are working on solutions for this where like we're launching a DEX actually soon to work on this issue. So essentially it's a curve with Oracle price for assets that are like slightly correlated, like let's say US dollar and euro, but not exactly the same denomination, obviously.
Hmm.
It's hands-off LPing. So we don't know if this is going to take off, but we know for a fact that non-USD stablecoins won't take off without this infrastructure piece. So it's all like, can't guarantee that this infrastructure will lead to success, but can guarantee that without this infrastructure, it's impossible to have success for LPing for non-USD stablecoins. So fingers crossed there.
Yeah, it sounds like it's worth going after for sure.
Yeah. And essentially what you get is Forex on chain. So like now as
Yeah,
local OTC, you don't have to do the hard work of trying to figure out how to off-ramp USDC into Nigeria, right? Like if there's a Nigerian stablecoin, most likely that Nigerian stablecoin will play very nice. That's the only reason really why you would have these kind of local fiat stablecoins. Like the biggest reason is for on-off ramping, right?
yeah,
So like you could do essentially Forex on chain and then just worry about offboarding Nigeria stablecoin into a Nigerian bank, which is going to be immensely easier than off-ramping USD stablecoins to a Nigerian bank.
yeah. Well, it sounds like you almost have to do that in order to actually get use, right? That's what you said. A lot of the groundwork that was done by the other chains that are being heavily used to do that, right?
Yeah, yeah, exactly.
Yeah,
Do you
man.
use um do you use Sphere or any other like stablecoin credit cards or products like that?
No, no, I don't use any of that.
I see. You don't have to answer this question, but like what percentage, and this is we run a DeFi community called Rare, which is
Hmm.
just yeah, we talk a lot about kind of like the Rare investment philosophy. It's similar to FIRE, right?
Okay.
Financial independence, retire early.
Yeah.
Rare is the crypto version of this. And so like we have a lot of conversations about like what percentage of our salary or like net worth do we have on chain. The results have been kind of interesting. It's like uh I'm in the minority where I kind of keep 50-50, like 50 on crypto and like 50 in my bank account. Other
Yeah.
people have it upwards of like 80, 90%, if not all, just
In,
all on
in,
chain.
in
In
crypto.
yeah, yeah, yeah. I find that very, very interesting. So like in those cases, I think that they're very, very hungry for stablecoin payment use products, right? Whether it be these
Yeah.
stablecoin loaded credit cards or wallet products. So I'm just kind of curious, like, do you mind disclosing like what percentage of your wealth is on chain?
Yeah. Let's see. I would have known this a lot better before Solana started pumping so hard.
Yeah, and no,
But
we're not looking for an
no,
exact, just like roughly.
no, it's definitely, I mean, like not including like, are you including investments and just
No, you know what?
non-crypto
Never mind.
investment?
Never, no, no, don't worry about it. Don't worry about it.
Yeah.
It's fine. It's fine. Keep the
It's I
IRS off your ass. So
no. I pay all my taxes and everything. It's probably close to 50-50, probably a little heavier on the crypto side now. So
I see.
yeah.
Yeah.
I consider
Uh,
myself a boomer. I consider myself like a little bit more on like the conservative side where it's like I kind of freak out if it gets, too high. So
yeah, dude. I true to being a stablecoin issuer, I feel like I'm a little more frumpy than most. Like, yeah, sure, like I hold my bonk and whatever. But this kind of endless chasing of the next pump to me
yeah,
is bonkers. I
it's
don't
crazy.
understand the behavior.
Uh,
It's kind of like I know you worked hard for that money. How could you?
yeah. Yeah, it's something. There was a little bit of this in like the NFT craze. It was like this to a degree, but I feel like the meme coins are just next level degeneracy where it's like people are making a lot of money, but people are losing a lot of money too on nothing, you know?
Yeah, yeah.
'Cause-
Um,
but you know what? Something that brought that up. So like I got interested in crypto and Bitcoin. I don't know, it was like 2016, 17, and people just made a bunch of money in Bitcoin. And then it was like, all right, what do we do with this? Like how do we spend it? Like what can we actually do with it? And it was like really hard to actually do that while like holding your Bitcoin. You have to sell it in order to use it. Where I feel like Solana has, some pretty good ways to do it. I think I just did some like Soul card that's like a debit card where you can spend Solana, or you can spend. I think it's just USDC on there that you can spend, or maybe Solana too. But I feel like there's that, and like with the Stripe integrations, like there's different ways that you can spend it, or that you can spend your Solana on there. But to be honest, I don't really do that. Like I still use my credit card for most of my transactions, you know?
yeah. In a past life, I worked at Samsung Pay,
Hmm.
which was kind of our answer to Apple Pay.
Okay.
And the lessons I learned there is that if if there's even like a 2% failure rate in people's ability to use a payment option, they just will use whatever's easiest, right? And like so in some cases, in some countries, people just prefer cash, right? Because like the failure rate for like, hey, do you have a credit card machine? And 2% of the time merchants say like, no, I don't. Especially in
Yeah.
countries that don't have like really heavy POS terminal. I mean, I think 2% is just a extreme example, but like a more realistic example is like 20% of the merchants you go to don't have uh, card terminals, right?
Yeah.
So people default to cash in that situation. Even though you have 80% coverage in the country, people still default to cash because it's just the easier thing. And Solana is nowhere near even 80%, like Solana stablecoins. Like there's so much work that needs to be done to integrate stablecoins into the everyday use cases for Americans versus Europeans versus Africans versus South Americans. I mean, it's just one very, very intricate puzzle. And the thing is, the market is so big and the spider web of transactions is so immense that you can end up with very different payment systems and flows, which is the actual case right now as well, in the real world. But with stablecoins especially, like, yeah, you can end up with like a lot of weird kind of payment scenarios. Like India has like UPI, which like no one else has. It's the most bizarre thing ever. It's like it's like Jupiter, but for like different payment networks that only work in India. And it's just like, what the fuck?
Yeah, I bought the first Solana phone, and literally when I bought it, my expectation was I am going to go around and I'm going to spend Solana with this phone in real life, and it is going to be amazing. I have never done that, never used it for a single payment. I don't even know where I could find it, right? Uh, that was a business idea of mine, was to build a map of places that would accept Solana Pay so that I could travel there and spend it. Obviously nothing came from that, and I haven't spent it at all, but it's not as easy as that, right? There's a lot that goes into accepting it. And I think it was Circle that's doing some sort of tap to pay where maybe they're able to tap into Apple Pay eventually. And you can actually spend USDC that way somehow. I don't know the full details of it. Maybe you do, but there's supposedly going to be more payment options. I guess there's always going to be something coming, but I guess I'll believe it when I see it, and I'll be the first one to go, travel somewhere to pay. Like if Solana Beach, if there was like a bar or a restaurant there that would accept Solana USDC on Solana, I'd go, I'd travel there. I'd make it a point to go.
I think the easiest route for you, if you actually want to do tap and pay today, like I don't know if do you use Apple Pay? Do you use an iPhone?
Yeah, yeah.
Yeah, I mean, if you're a user of Apple Pay, then just download the Jupe mobile app. They are working with MoonPay
Mhm.
for MoonPay not only is an on-off ramp, actually probably just on. I forget exactly what they do, but they also MoonPay also makes available a USDC card, a virtual card for Apple Pay. I don't
With
know if that'll
with
work.
through the app.
Yes, my understanding is that's how that works.
Yeah.
I don't have an American version of the phone, so I'm not quite so sure how that foot. And I feel like it's different for each jurisdiction. So
Mhm.
like definitely check it out yourself. But yeah, download the
Yeah.
Jupe mobile wallet. Put like $5 worth of USDC, and then try to load a card into Apple Pay. My understanding is it works, or at least it's
Wow.
advertised to work. Um, yeah, MoonPay is really doing the heavy lifting there. It's not Jupiter, but Jupiter has a really tight partnership with MoonPay. So very excited to see that use case out in the wild more.
Yeah, so I have the app, and I was gonna try it out. I think I just need to verify something. They didn't take a utility bill that I sent or something for the verification to get things started. So
Yeah, yeah, yeah.
so I never fully verified. So I haven't gotten it on. But I was assuming that that was just for adding funds in. I didn't know that that was for onboarding, on ramping, off ramping, and for potentially paying. So I'll uh
Yeah.
I'll, I'll do that today.
Yeah, yeah. I mean, like MoonPay definitely needs the KYC for either use case.
Yeah,
Now it's a question of like by region and like by version of like what type of phone you have and like what version of Apple Pay you have on this specific region-based phone. Like,
yeah,
can you load a MoonPay kind of like card on it, more or less?
yeah,
That's I still haven't tried. I probably after this call, I'm gonna try that immediately.
yeah. I wonder if it's just USDC or if it's any coin. Because I want to say that Soul credit card, Soul CC, that I think it is just a debit card, but I think it would actually take other coins and it would swap them at the time of purchase into dollars.
Yeah, it's
Um,
not that hard, quite frankly. Yeah, they just swap
yeah,
to USDC. They make it spendable immediately. It might just be like USDC is priority, and in the absence of USDC, then it's the asset that you specify.
yeah, yeah. Wow. Yeah, that would be good. Yeah, I feel like one of the things that I was thinking about was like, all right, like now is like not the time to be in stables. Like we're pumping, Solana price. I don't even know that shot up earlier
Yeah,
today, but I was like, all
yeah,
right, when I'm going to be taking profits, as
yeah, yeah. Sure, sure.
right at the top, of course, is how it always
Yeah,
goes. But as soon as I start bragging to my wife the price of the coins, I will know that it's time, and I will take a little bit of profit.
yeah,
That tends to be the best indicator for me. And the way to take profits, I think, is going to be to leave it in ISC. I feel like that's such like a like I when I was thinking of like, all right, when I take profits before, I don't even know. I just think of USDC or just think of dollars, but it's like, all right, like looking forward with the way that I think the economy is going to go, with the way that things are going to change. It's like, why would I not go after, why would I not hold ISC? ISC, it's kind of like, I don't know, it seems like a amazing like financial innovation that we can just buy and have on our phone if we want. Like it seems
Yeah.
awesome, right? Like
Yeah.
what's your take on that? Because I mean, I'm sure that we should all have some stables at some times, but I feel like that seems like that's my plan. So I don't know what you want to think about that.
Yeah, no, it totally depends on like how you're trying to make money in the space, right? So if you're trying to get make money through token exposure, then it obviously makes sense to buy your favorite token if you haven't already, especially when the price is low, and obviously we can all predict that with exact precision.
Yeah, yeah.
And then when when it tops out, everyone sells at the exact same, the highest price. The only
Yeah,
people who get rugged are tourists.
yeah, yeah.
But no, but yeah, getting exposure through ISC and like, I'm not even trying to talk myself out of a sale here, but another great option is JLP, right? The
Oh yeah.
liquidity token for Jupiter perps. It's just a different, it's more risky than ISC. Not in terms of, I mean, I don't know philosophically how you feel about smart contract risk. I always feel iffy about all smart contracts, no matter how audited they are. That's not Jupiter FUD. I think that's like, then all platforms use smart contracts as well. So now I use plenty of smart contract based platforms. So like obviously like I'm willing to accept a certain level of risk as well when I connect my hot wallets to like some random website for a project that I want to support. God knows if they've done the proper work there, especially for these earlier projects. But my point being is that like JLP does come with smart contract risk, and also it's going to be more spiky in price because just of the long exposure to Bitcoin, Solana, and Ethereum. ISC is going to give you, for the risk that it provides, great risk adjusted return. But however, if you're trying to source like your profits this cycle more on like trading fees, which I think is also a very like if you like, especially for people who don't have confidence in their ability to time the market, like pretty good idea. You could make a lot of money in a bull market just through trading fees. So an example of this, like whenever you see a hot token launch, like Grass yesterday,
Mhm.
provide liquidity for it. We have some people in our DeFi group who I think using $18,000, they got like providing around $18,000 worth of liquidity for the Sol grass pair. They got some absurd amount of grass. I want to say like 1,000 or something like that, and then like 5 or 6 Solana Sol, which is quite impressive for like the APY on that pool was like over 1,000%. I was like, what the fuck?
So, okay, so then the thought there is because so many people are receiving that airdrop right away, a lot of people just dump it right away. So there isn't that liquidity to start. So because they're stepping in with the liquidity, they're gonna make a ton of money based off the trading fees because it is so early, right? Or
Yeah, I mean, actually, in the case of it's so case by case depending on the
yeah,
team and like how they do the distribution. But in Grass's case, that they actually had a very low amount of tokens available for their FDV. It was like 500 million FDV, and I think I read 100,000 tokens, which doesn't make sense to me, but apparently it was 100,000 tokens. And so if you provided like any amount of grass and then paired that with Sol, then like you would make and what really matters is whether or not the token is going to be traded. Like if there's going to be a high volume of trades so that you can extract fees, right?
yeah, yeah,
In a bull market, like where you have multiple meme coins that are popping, like GOAT is another example of this. Like if you were to provide liquidity for GOAT like a week or 2 weeks ago, you would have made serious. So again, you would have made more money if you had bought GOAT at the perfect price and
yeah,
sold at the perfect price. Like
yeah,
obviously this is more money, right?
yeah,
But
yeah,
if we're
yeah,
talking about what's guaranteed, it's like I know or I have a feeling that GOAT is going to be trading a lot. So since I have a feeling that GOAT is going to be trading a lot, providing liquidity for this token is going to accrue me a lot of fees, right? So like
yeah.
that's kind of the easier way of a very attractive way of making money. But obviously, like everyone has the illusion, myself included, that I'm going to time the market just perfect this time.
Yeah, yeah. You know, that it's so true. It's like we all think that we're like amazing traders. And if you look at like, the people that actually make money, it's the people that just buy and hold and then somehow sell and profit, right? You're not
Yeah.
making you don't really make that much money by trading around too much. There's definitely people that can do it. but it's, you're talking about 5, 10%, probably even less, and a lot of those are
Yeah.
like, professional traders that have been doing this for a really long time. And, they were just sitting there laughing at us, our
Yeah.
setups and everything, and they're cleaning up.
Yeah.
I always think it's funny of like the, what crypto is like the intersection of like turbo geniuses, like finance experts, and then there's just like raw degens on the other side, and somehow they meet together, and that's crypto.
Yeah, yeah, yeah. Um, I think the people who make the most money are folks who are don't make a lot of movement and they show conviction in times of high risk, right? So,
Oh yeah.
Soul Big Brain is a huge, like the poster
Oh
child
man.
of this, right?
Yeah.
Like those legendary buys at
Oh man.
$17.
Just
It's like,
5,000 a clip, just going in, just
yeah,
5,000 Solana at a time, and I don't even want to know what each one of those is worth now. That's just
yeah.
insane.
I'm led to believe from chatter that he's sold the majority of that already. But
Oh
even if
really?
he were, yeah, yeah, yeah. But even if he
I
were
mean, yeah.
to exit out that position, like having high conviction at $17 and then selling off as you approach 200 is gonna make you way more fucking money than if you were trying to like do and much more safely than if you were trying to do 10x like 20x leverage on Sol right now
Oh
and like
yeah.
on it based on a 10% price movement or whatever. It's
Yeah.
like, bro, the people who are really making money have see things at a much larger time scale, and are willing to place bets when shit looks very, very dicey.
Oh
Because
yeah.
the return, if it happens, is glorious.
Yeah. Yeah, one of the reasons why I have this podcast is because Solana just nuked down to nothing. And it's like so sad. Like there wasn't anybody really talking about like, hey, like the user experience still is great. Like there's still teams building. This is fun. Like I could post like I ran into like an issue swapping something on Jupiter and complained about it on Twitter, and I think Meow DM'd me and was like, "Hey, what's going on here? Let's fix this." I was like, this is great." And so I was like, "All
Yeah.
right, you know what? I'm buying more." So now we get to reap those rewards. It wasn't like deep conviction. It was just like, "All right, this I like this. So let's keep it going."
Dude, same here. Like when we decided to launch on Solana, which I never answered your question for, it was like right after FTX. And it was like
Oh, was it?
yeah, a lot of people when we were writing the white paper, we were like, yeah, we're launching on Solana. And they're like, are you fucking dumb? Like that's the dumbest. Because I mean, even now, all new stablecoin projects launch on Ethereum. They don't launch on Solana. And it's because Ethereum has way more liquidity.
Yeah.
But uh, I think that we made the exact correct bet, which was, hey, you go to a Solana hacker house, even in the depth of the bear market, it's popping, and there are new projects launching all the time.
Yeah.
I won't name other chains because I don't want to shade them, but like I've been to plenty of other hacker house-esque events, and they never matched the energy, the organization, or the quality of Solana projects. And so that really gave us the confidence to push forward and say, like, we're placing all our chips in Solana. We haven't even gone multi-chain yet. Um, so I think we're one of the probably the probably the second Solana only stablecoin ever. The first was UXD.
Yeah.
But I think we're the second. Everyone else has launched somewhere else and then came onto Solana later. But yeah, very, very bullish on Solana. That we're are obviously my mission has evolved from, make ISC the number one stablecoin in the world to actually make Solana the number one chain for stablecoins. Like
Yeah.
that's actually my real mission statement right now in life. So very much looking forward to building a Solana stablecoin future.
Yeah, me too. I think it's got a good shot. I mean, I think that it would be hard to have like better user experience than what we're seeing on Solana right now. And, you know, Tron isn't necessarily the most decentralized. I feel like it's just like, can you use it out of convenience where I'm hoping, the way that everything's been done on Solana is like, it seems like they've done everything right, like kind of like from the ground up. And I think that that's spreading. And I think that's where we win. But yeah, I guess we'll see.
And constant improvements, right? The job is never
Yeah,
done.
Yeah.
Even a few months ago, like OR V1 basically broke Solana for a
Yeah.
second.
Yeah. Oh man. Yeah, I
Yeah,
remember.
yeah, transactions were not landing at all. Growing pains. We're all building in public. Like, be both forgiving and ruthless. It's like understanding, but also like fix your shit. And that's what really matters.
Yeah.
Is the network improving over time? What Frankendancer is doing, not just theoretical, but like 1 million transactions a second in the demo. Which, like, I understand that not all of those like I don't really know how to explain this, but there amongst transactions, there are different weights for different transactions. And so, like, obviously for the purposes of the demo, they use like the lightest weight transaction possible. So they were able to achieve a
Oh, yeah.
million TPS. But even still, on the
So,
like, this isn't theoretical 1 million TPS. This is a legitimate 1 million TPS. Whereas like the theoretical limit before was like what, 40K?
yeah.
And
Yeah.
like now the actual TPS is like what's actually happening on chain is like what, 3,000? So it's
Yeah.
kind of like
Yeah. It's orders of
uh,
magnitude higher. Like it's insane when
yeah,
you think of like what that could potentially unleash, right?
yeah. Visa and MasterCard don't even need a network that does that, right? Like it's very much like the drips of the world, the ores of the world
Yeah. Yeah.
that are
Yeah.
basically on
Which
the spam chain.
Yeah, which I saw you guys have there's an OR ISC pool, right? That I think that you guys
Yeah.
were incentivizing, or I saw you guys talking about that recently. Um, OR is a cool project though. I like it. I wish that I could mine better and get more blocks, but I am mining. So
They have a new cloud staking service called Ore Rush that's not built by the Ore team, so do your own research for sure. But the Ore team has been heavily in discussion slash kind of like building with the community in partnership with Ore Rush. It essentially gives you access to cloud resources so that you can mine ore. I'm a little not concerned, confused about like, okay, so like, am I paying for rental space in the cloud? How does that work exactly? Like,
yeah,
what's the economics of that? But yeah, if you're dinky laptop like my laptop,
yeah, it gets
it
nothing.
is yeah, it's basically mining you no ore, then
Yeah,
consider Ore Rush. It's very
yeah,
interesting. I mean, there again, we could talk forever because there are literally a million things to
yeah.
do on Solana. I recently just learned about Poop to Earn. You hear about this project? Uncomon?
No, I haven't heard this. I gotta look it up. What is it? Uncle Von?
Yeah, UNKOMON, Poop to Earn. It's a submission for Radar, the recent hackathon. And at first I thought it was a giant joke, but actually makes a lot of sense. Poop is used a lot in research. So essentially what you're doing is you're taking pictures of your shit and then you're sending it to like a nice little gamified app. The app is still waitlist only, so I haven't had a chance to play with it myself. It's a Pokemon-like experience because the developers are based out of Japan. It's like very on brand for them.
Oh man,
Um,
it's amazing.
and yeah, you earn incentives. I don't know what token or points they're going to be offering later. But yeah, you earn incentives by sending pictures of your shit to researchers, and they use that. I don't know how exactly pictures of my shit is helpful to their research.
Yeah,
Perhaps in the future you'll actually be able to provide actual shit samples so they can like measure, like if you're diabetic or something like that. Like I'm sure that there's
yeah.
something
Oh
there,
yeah,
right? Like that makes a lot
yeah.
of sense that I'm familiar with. But making the poop sharing experience because aside from Web3, I don't know any other audience that would be degen enough or like weird enough to be willing to do. Like, imagine trying to ship that in the normal world. It's like,
Yeah.
yeah, we have this photo where you take pictures of your shit and we'll give you like 2 cents for it. It's
You
like, what
know
the fuck?
what?
Like, no.
My mind immediately went to we have a 1-year-old daughter. So it's like my mind immediately went to, wow, I can farm this.
Yeah.
Yeah,
So
yeah.
truly endless things that are being built on Solana. Deepin, stablecoins, meme coins, all the DeFi protocols, all the
Yeah.
payment options. It's just an endless ecosystem of fun.
Yeah, yeah, it really is. It seems like the fun kind of pushes the limits of what they can do, and then they figure it out and then build past it, right?
Yeah, exactly.
Sounds good. So one question I had, so PayPal recently came out with their stable coin and they came out like swinging, right? Like they went, I don't know the exact amount of millions of dollars that they incentivized, but it was like in the tens of millions of dollars that they provided to anybody that was staking it on Camino and maybe some other DeFi protocols. So it's like with seeing kind of how they're coming into the ecosystem. And I think it was a great marketing expense, right? Like when I saw it, it's like, okay, we pay, like a lot of friends. I'm going on a bachelor party in a couple of weeks, and it's like we'll probably Venmo money back and forth. I'll just keep that money and I can send that now as, you know, PYUSD to my Solana wallet, and it'll be great. So that marketing campaign kind of like worked in my head. Like I see that now as like, all right, money on PayPal, money on Venmo is actually money on chain and, a quick transfer. And it's like, that's an insane amount of money to spend to do that though. So it's like, do you like what, like with where you guys are at now, like across DeFi protocols, like, is that something that you guys think about? Like how would you expand into all the different ones? Or it sounds like you guys are in a lot of the different protocols already, right?
Yeah. So let's talk about PayPal first, right?
Okay, yeah,
Um,
yeah.
so PayPal, as you pointed out, like spent like a eight figure war chest to specifically for borrowing and lending protocols to make the yields on lending your Pi USD very, very sexy
Yeah.
for people who provided it. And so they were able to pump their TVL to just about a billion. And last I checked, and on Solana, it's a billion like across all chains. I think it was 600 million on Solana.
Hmm.
Within a month of stopping incentives, it chopped down to 300 million.
Oh,
I'm
did it
actually
really?
yeah, yeah, yeah. Now, interestingly, on Ethereum, it stayed more or less the same. But also at the same time, I think that most of the incentives were directed towards Solana. So you would see the biggest kind of variance in the total market cap for Pi USD on Solana. It would be more severe there, more pronounced. Mm, I, look, sometimes you provide incentives either through a future token, like, let's say Cloud for Sanctum, and the
Yeah.
TVL fucking sticks, right? Like
Yeah.
you you get a billion TVL, it might drop to like 700. You do great breakpoint marketing and you're back to a billion. Boom, baby, right? Like so
Yeah.
that's an example of like marketing expense, but also it's like kind of a little different because PayPal is really juicing yields, whereas like you're creating new demand for cloud, like it got this governance token. But still, like in both senses of the word, you're spending real money to get adoption and incentivize people to either use USD, LSTs or your stablecoin. I think it was a failure in Pi USD's
Oh, really?
case. Yeah, spending that much money for well, I I haven't checked in like a month. I bet you Pi USD's market cap in Solana is like probably sub 200 million. I might eat shit after I check on this call. But it halved within a month ago. So by now I would expect it to be like sub 200. So like was it worth spending, on the lower end, $10 million to get 200 million in TVL? Like, I'm not so sure. I think that it would have
Yeah.
been a lot better to funnel that money towards like Pi USD integrations into like every Solana project. Like that would do a lot more for a Pi USD mindshare over time than like juicing the yields of like a few whales that can afford to do it.
Yeah. Yeah. I mean, that's essentially what happened, right? Like you had
Yeah,
stables, you were gonna just put them in PYUSD and get 20% APY, right?
yeah, yeah, yeah. Do
Yeah.
you mind if we get into rapid fire?
Oh, yeah, yeah, yeah. Yeah, absolutely. Absolutely. Yeah.
Awesome.
And appreciate all your time here. Thanks again for coming on.
Oh, no, 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 no. I'm super happy to be here.
Yeah, sounds good. Sounds good. So I do put together kind of a few rapid fire questions here, where we just kind of get into a few things, hopefully get a little bit of quick alpha from you, and we'll go from there. So, favorite NFT?
Oh, Monkey DAO for sure.
Monkey Dow. Yeah, me too. God,
Yeah.
I love the monkeys.
Yes.
Now, what are your views on NFTs? Do you think they're over, or do you think they're coming back?
Boogle, Lucid Drakes, who else am I forgetting? Dead King Society, Monkey DAO. These are the NFTs that will survive. Everything else will die a slow death. That's my view.
You think so? Yeah.
Yeah, 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 yeah. Sorry.
Yeah. I mean, there's always hope for summer bags.
Yeah, Quex. I mean, like, basically, like, I'm obviously forgetting a lot of great, kind of limited collections, but like any of these, like 69 of 69 mint or like 100 of 100 mints, like I have hope for all of them, every single
Yeah.
one.
Yeah.
But if you launched 5K generative collection,
Oh yeah, yeah.
yeah.
Appreciate the shout out to the Quecks. I've got a Queck profile picture right now. Love the Quecks.
Yeah, Saga monkeys as well.
Oh
Like
yeah,
there are obvious exceptions to this rule, and it really just depends on the founder.
yeah, yeah,
Like how bullish am I on the founder?
yeah. I mean, it's been a brutal year for NFTs. So if you're still around working, props, right? I mean,
Yeah,
yeah, that sounds good. What's your favorite metric that you track for ISC?
the DeFi integrations.
DeFi integrations, just
Yeah.
across like total number that you guys have. I think that's like what you want, I guess.
Yeah, because our internal slogan is first Solana DeFi, then emerging markets, and then the entire world. And we do think that there's an order of operations to this. And so, like every single time ISC gets added as a new integration in some platform,
Yeah,
I just see like the utility increasing just slightly, right? So
yeah,
we obviously need this to be comprehensive,
yeah.
but yes, I do look at number of DeFi integrations.
Awesome, awesome. Um, let's see. In 5 years, ISC is incredibly successful. What does that look like?
IC is legal tender in a country that does not have a sovereign currency. So
Ooh.
you look at Zimbabwe, for example.
Mhm.
So Zimbabwe's story is like very sad.
Yeah.
They had a currency that experienced hyperinflation right after the global recession of 2008.
Mhm.
They decommissioned the currency in 2009. They brought it back sometime in the 2010s. I want to say like 2016 or 17. I forget, maybe even 2018. And then fucking COVID, and then they used the money printer again, which is very addictive.
Oh
But then
yeah,
they had
yeah.
to decommission the currency again in 2020. So like Zimbabwe has twice decommissioned the Zimbabwean dollar, so they default to using US dollars, right? And so like kind of my thesis is that like why would a country that is like they're not American citizens, they might be US currency holders, but like why should they be subject to the monetary policy of the United States?
Yeah.
That's my main point. So I'd love to see countries like Zimbabwe that have not been able, and by the way, fiat does not work for everybody. That's like the big lie of fiat. Like fiat only works for the very few countries that are able to attract like enough investment into their bonds to basically make it a trustworthy product. But for everyone else, it's a
Sure.
loser's game. So
Yeah.
there's a whole bunch of countries out there that I think would benefit from just like swap like using. Look, if you don't want to use ISC, that's fine. But like literally, I think a concept like ISC, which is a currency that's separate from the existing monetary system and shared by all countries where fiat currency doesn't work for them,
Mhm.
um, uh, is the inevitable future at some point.
Yeah. Well, and I mean, if you look at crypto's history, that's like essentially what Bitcoin was here for, right? And
Yeah,
I feel like a lot of, the people that are newer to the space, have kind of skipped that whole part of it. And now we have
yeah.
dollars on chain to look at, right? So I feel like ISC is a good attempt to bring that back, get that conversation going and get that into people's heads. So I love what you guys are doing. And last question. Let's hear some advice, some alpha for some first cyclers out there. A lot of the listeners are kind of newer to crypto. This is kind of they get like some pretty introductory questions. So what alpha can you give us for the newcomers that are in this?
Um, so the first time I was involved in like a crazy market event was GameStop. So like
Oh yeah.
I'm like super OG WSB back when like actual DD was being shared.
Oh, so cool.
And so uh like GameStop was such a wild ride for me. And it's funny, I learned more from GameStop than I did about like from meme coin trading, about like how to time markets. And the answer is you can't. And
Yeah.
so kind of the advice I would give to any first cycler out there is that if you have a profit price target and you hit it, don't update your fucking price target. You
Yeah.
know,
Yeah. Yeah. Yeah.
it's like you buy meme coin at dollar and then you say like I'll sell if it hits three. It hits three and you go like, but this shit can go to six. Don't do that. It's
Yeah.
just
Yeah.
it's just as look, you'll make less money in the specific trade, but you'll make more money over time because you won't be losing it by upgrading. And that's the number one mistake I see from meme coiners is that they have this kind of logical, theoretical, rational, like, okay, I mean, it's not always rational what tokens they pick, but the idea that a meme coin could 10x is very rational, right? And so like if you say that, hey, I'd be happy, like I would legitimately be happy in my current status right now, like if this were to 2x, make that your fucking price target and like never
Yeah.
look back. It's
Yeah.
okay. Like you can watch it run to 10, but I promise you the pain of missing out on that additional like 80% is so much less than the pain of round tripping or selling for a loss. Like that pain, but it's hard for people to really understand that until they experience it, right? It's better to make less profit than to round trip, like and then sometimes like round trip and make a loss, which is even dumber, right? It's
Yeah.
like
You got to
the
secure
worst
the bag.
feeling.
You got to secure the bag, right?
Yeah.
Yeah. No, that's great advice. I have definitely round tripped several coins several times. But I
Yeah.
mean, profit is profit, and you have to take it, right? I mean, in order to last, in order to make it to your next cycle, like you really do have to lock it up at some point, right?
Yeah. I think the other advice you gave is very much the same feeling that I get. Is like if you ever start feeling like you can brag about your portfolio, that is the exact fucking time to sell.
Oh
It's
yeah.
the exact time to sell. When you're going like, man, my portfolio is looking pretty good right now. That's when you sell. I promise you that is when you sell.
Yeah. If
Because
you're
right when you
screenshotting, yeah, if you're
yeah.
screenshotting your portfolio, you gotta trim it down. You gotta sell some.
Let me put it this way. I've never multi-screenshotted my portfolio for more than a week. That's never happened. Like I've never
Yeah.
had an instance where I screenshotted and then like 2 weeks later I'm still screenshotting because things are looking great. Like that never fucking
Yeah.
happens, right?
Yeah. Yeah.
So it's like if you're screenshotting, it's time to sell. And one last tip, if you're selling, this isn't like stocks where it's like, hey, I'm gonna sell 50% now, and then like as it goes up, I'm gonna sell another 10, another 10. Sell the whole bag. All right.
Yeah. Yeah.
Sell the like I can't tell you the amount of times I'm like, yo, I'm gonna sell 50% of this bag, but it's gonna run more now, right?
The idea of a moon
And now,
bag is such a
yeah,
lie.
yeah.
Yeah. That's
I
yeah.
mean, like, no, but you know, you look at the survivor bias. You look
Yeah.
at Mudang. You look at Goat. You look at Bonk. You look at, but hey guys, that's like what, 4 coins out of hundreds of thousands. So,
Yeah.
and not only that, but it's like you might even have the right coin, but you caught it at the wrong time. So
Yeah.
it's so it's all like who knows if and again, like you look at Goat and it's like I look, I'm still fading GOAT and I'm still fading I faded with all the way up to
Me
like 2
too.
billion or something. Yeah. And
Yep.
it's just like because yeah, you look at 150 and you go like that's great, but how much more is it going to run, right? And it goes to 5 million, 500 and you go like, okay, that's great, but how you get 2 billion? You're like, okay, I just missed it. I missed it. That's fine.
I missed it. Yeah. Yeah. I completely missed whiff, but you know what? I hit bonk and I still hold the bonk. And you know what? I love it.
Yes, that's good. Um, Thomas, I want to say that this was an absolutely wonderful podcast. I have very few kind of like chances to talk to Solana nerds where like we can just geek out about a
Yeah.
very wide variety of topics. So I really appreciate you just like chatting and like having this kind of substantive discussion about like stuff that's going on in Solana and where things are going. I hope it was more entertaining than just ISC and stablecoins.
No, I loved it. It was incredibly insightful. I really liked hearing everything that you had to say. And look, I could talk Solana all day long. So if you ever want to come back on, anything that you forgot to talk about, anything, you're welcome on anytime. And thanks again. Really appreciate it.
Yeah, thanks. Appreciate it, brother. Take it easy.
All right. We'll talk to you later. Bye now. Thank you.